and welcome to Stablecoins Are Killing It, episode number 21. I'm Lou Kerner with Just Stable. And this show, Stablecoins Are Killing It, we started this in April. As I said, this is our 21st show. When we started in April, there was about $7.5 billion of market cap of stablecoins. And today, there are over $23 billion of market cap in stablecoins. So stablecoins are truly killing it. We've got a great show today with Kory from Stably. Welcome, Kory.
Hello, how are you guys doing? Thanks for having me on the show, Lou.
Sure, it's a pleasure. Looking forward to our talk. The format of the show, for those who haven't been here, is we will start the show with Kory giving a 10-15 minute presentation about Stably and sharing some of his views on stablecoins, and after that we'll open up the Q&A from the audience. And if you have a question, put it into the chat, and if we pick your question, we'll chat you back, and then we will actually bring you on stage, which means we'll open up your video and your audio so you can ask the questions yourself and interact and have follow-up questions if you have them. And so with that, before I hand it off to Kory, it'd be great, Kory, just to get a quick background on yourself and your kind of when did you see the crypto light?
Yeah, absolutely. So my name is Kory Huang. I'm the CEO and co-founder of Stably. When I first got into crypto, it was back in 2013. So I was just actually back in college, and I was just speculating. I was trading penny stocks, and I heard about Bitcoin, which is one of the things that the people who were trading penny stock at school were talking about too. So I got into it, and caught the rise of 2013, made a little bit of money, and then the crash of 2014 came, lost a lot of money.
What was the rise of 13 like?
Oh, it was from like a few $100 to a couple more $100. Then I don't remember exactly what the price was back then. It was like $200-300 ish, but it wasn't. It was way below $1,000 a long time ago, and I didn't even buy like a full Bitcoin back then. But it was still a significant amount for kind of broke college student who was just swinging around money trading. And in 2014, when the market was all-time high back then, I put some more money in and it went down. And so obviously that made me lose interest in Bitcoin crypto for a little bit. I thought, no way, this thing is going to replace central banks and traditional banking system. And so I focused my attention towards just strictly trading stocks. I picked up coding. I learned how to build trading algorithms, which that was right around 2015, 2016, 2017. In 2016, I actually met my co-founder, David. He was an algorithmic trader too, but like a garage quant, not professional. He was working at Amazon. I was working at PitchBook. We both had day job. We were both doing our own thing, but on the side we were trading with algorithms. And how he and I became really close friends was we found that we were doing the same thing in the market. We were trading Vix derivatives. There were things called Vix Etfs, on the stock market that you can trade, and we discovered there were inefficient.
And just for people who don't know what Vix is.
Yeah, the Vix is the volatility index for the stock market for the S&P 500. So most of the time that volatility index goes down. So if you short it, most of the time you would make money. Like 10% of the time that thing would spike, and if you get caught up during those periods shorting, you're done. You're screwed, right? You'll go bankrupt 100%. You might even lose more than what you have. So what our system did was it trend follow and make sure that whenever that happened, it gets out, or it might even bet the other way. And we have options, out the money options in place to basically hedge the entire system. Long story short, David and I were cranking out like 60-70% net of fees in annual return. And net of the hedges, we were still raking in 40-50% annualized return. I even published on these algorithm on a platform called Quantitative. They got bought by Robinhood ever since. But anyway, so that's how me and my co-founder met. And then in 2017, we thought, why don't we trade crypto with our algos? Because we found out VIX derivatives and Bitcoin, they have similar trend properties. So if you're kind of a geek like me, you use what's called like the Hurst exponent to measure trend persistency or mean reversion in time series. Bitcoin and VIX futures, very similar behavior. And so then we literally took the same algorithm and we started trading Bitcoin and Ethereum in 2017. Then, then I didn't know it was our algos that did well. It was like just a bubble. Anyway, we did really well in 2017. Made a lot of money. Part of that process was we had to find a stable coin to trade in and out of. And in 2017, Tether was the only one that was around. And as you know, Tether had a lot of controversy from way back in the day, back in 2017. They had some accusation of them, minting unbacked stable coins. So I was just a consumer, and my co-founder was consumer. We had like a little bit less than $100,000 in our own play money that we were sloshing around trying to figure out what stable coin we can park it into, and literally we can't find anything besides Tether. And so at that point, the light bulb went up in our head. We were like, hey, there's got to be this. I'm pretty sure at that point, light bulbs went up in many people's head, right? Not just mine. And so at the end of 2017, we wrote a white paper. We said, we're going to do a stable coin first. And then in the future, we're going to tokenize more currencies and even more asset classes. So that was just kind of like the initial vision. Very, very simple and basic. And we went out and raised funding for that in 2018. We quit our job. David quit his $200,000 plus salary at a job at Amazon, which is, it's pretty impressive for someone, who just never done a startup before, just straight up quit his six-figure job and just hop on, become my co-founder. And we raised $500,000 in April of 2018 from venture capital investors, from founder startups, from BNEX, from some angel investors as well. And we took that money and built USDS, which is the first stable coin that we issue that's pegged to the US dollar. And that's pretty much how our company got started from there. So yeah, humble beginnings from just a speculator to now a cryptocurrency stablecoin CEO, I guess.
Cool. So can you talk about, in the time since you've kind of seen the crypto light, what's been the biggest evolution in your thinking?
Yeah, I'd love to share my screen and, kind of talk a little bit more about my view on the evolutionary of stablecoin. So let me go ahead and share my screen here. Oh, it says host disable.
Yeah. Okay, hold on just a moment. I will make you host, and then you can share your screen.
Awesome.
All right, there you go.
All right, I will go ahead and share my screen now. It says this will stop your screen sharing. Is that okay?
Yep.
All right. All right, can you see my screen?
Yeah.
All right, this is what do I call this? The a diagram on the stablecoin evolutionary stack. There's a lot of things going on here, but as stablecoin industry expert, we have a particular view on how the stablecoin industry got going, where it is right now, and where it might head in the future, and what are the drivers of adoption that we're seeing, and what are some of the predictions that we're currently making. Now, of course, we're no wizards, right? We just makes these educated guesses based on the amount of data that we see out there, but we could also be wrong. So again, do want to keep an open mind on what future possibility could be, and just be very aware of what exists out there, and just keep an open mind. So I guess we will start with generation 1, centralized stablecoins, right? That is the cornerstone money Lego block in the decentralized finance world, or in the stablecoin evolutionary stack as well. So if you look at the left side, there's a bar that goes from green to red, called the collateralization ratio, right? Usually generation 1 stablecoins, or the very first type of stablecoins like us, like Tether, for example, are 100% backed by real world asset, or supposed to be backed by real world assets. For example, we're backed by US dollar. USDC is backed by US dollar. Tether is supposed to be backed by US dollar, etc. If there are gold token like Paxos Go or other gold tokens out there, they're backed by physical gold that is sitting in storage somewhere. So what that does is it brings liquidity from the real world to the DeFi world, and liquidity is comes from traditional finance, or comes from the real world, right? Everything comes from the real world first, or most things come from the real world first. In the real world, you have liquidity, you have interest, right? You have profit, yield, interest, etc. And you also have risk, right? These three things are what a stablecoin, a first generation stablecoin, transfer over to the digital world, to the decentralized finance world, because when you tokenize, for example, a US dollar, you're essentially bringing not only the US dollar liquidity over to into the digital form, into stablecoin form. You're also, if that US dollar is earning some sort of interest or some sort of return based on its based on how you're investing in reserve, that interest or return could also be transferred over into the stablecoin form as well. And of course, if you do that, you're transferring the risk over too, right? It's the yin and the yang. You can't have you can't have return without risk. So why are we interested in bringing all of this yield, risk, and even liquidity over to a digital form, over to the stablecoin form? Because stablecoin, they are cryptographic token that are faster, cheaper than traditional banking or payment methods. They are borderless. They settle very fast, within seconds to minutes, and they're transparent, immutable, and they're publicly verifiable. So all these different benefits, over traditional money, is the reason why we want to tokenize real world assets, including fiat currencies, and bring them over to the digital world, because then
when you're talking with potential clients and talking about all the advantages like you were just talking about, what do you think is the biggest misconception on the other side, with that people think about crypto or stable coins?
Let me think about this. I think one of the biggest misconceptions that I do encounter regularly, and this is just from normal regular people, not like industry expert or anything, they confuse stablecoins with like Bitcoin, and they think that stablecoin is something that they should invest in as well. Where stablecoin right now, you use them for trading, for utility purposes, right? Like you want to send money, you want to trade, you want to settle something, you use a stablecoin. A lot of people thinks that they buy a stable-coin that later on it could go up in value. That's not the same thing here. Okay, that could be the case for certain other type of stablecoin that pay interest. We'll talk about that a little bit later. But right now, in the between the DeFi world and the traditional finance world, there's this thing called the Great Wall DeFi, right? It's very hard for money from the real world to flow into DeFi, because you need basically on-ramp. You need bridges to help bridge the wealth from the real world to the digital world. And stablecoin is essentially that bridge. And that's what the generation one stablecoin does. Generation 2 stablecoins, right, are the ones that actually are no longer centralized. They are now decentralized. And they might even take in generation 1 stablecoin as collateral. An example of this would be MakerDAO or DAI. And let me actually show my screen here. I have MakerDAO pull up somewhere. So this is Maker. Maker is decentralized stablecoin system that creates DAI. It's the first one of the first decentralized stablecoin in the world.
We're not seeing anything but you. So
Oh, did the screen sharing stop? Interesting.
Yeah.
All right, let me do it again. Can you see my screen now?
Yes.
Okay, so this is DAI, right? Decentralized stablecoin, backed by a basket of
Yeah.
tokens.
As we discussed, I think most people who come to stablecoins are killing it are familiar with DAI and
Awesome.
decentralization and such.
Yeah. So so that's an example of a generation 2 stablecoins, right? They're starting to be decentralized and incorporating pieces of Gen 1. Earlier in this year, around February, March, April, we start seeing the the advent of decentralized smart stablecoin, or meta stablecoin, or yield optimized stablecoin. There's a lot of name for these things right now, but and what are they, right? These things are essentially baskets of Gen 1 and Gen 2 stablecoins, but those stablecoins are now deposited in DeFi protocols that can earn interest or some sort of return. For example, Compound is a DeFi protocol that lends money out and lets people borrow and pay interest, and whoever deposit liquidity in that protocol can earn that interest, right? So if you deposit, let's say, a USDC stablecoin into Compound, Compound will give you back CUSDC, and CUSDC is essentially a meta stablecoin that is redeemable for the original USDC and the interest that is, earned by that USDC. So in that sense, this new CUSDC smart / meta stablecoin is similar to kind of like, I guess, with a zero coupon bond. It just never expires. And like a bond, it just never expire. So the price of it does inch up slowly over time to reflect the value of the underlying assets, which is the principal and the interest that grows over time. So why are these stablecoin called smart, right? Because some of them are actually programmatically designed to identify the best yielding instruments or platforms in the DeFi world, and it will allocate money toward those platforms that has the best yield. And when the yield from that platform is gone and another player has better yield, it will remove liquidity from those platforms and automatically reallocate it to the other platform. So that's what we saw start happening this year. Gen 3 stablecoin. Example of that, including, like I said, CUSDC, CDAI, YCRV, which is a stablecoin that you receive and you deposit liquidity into Curve. Curve is a DeFi protocol for stablecoin exchange. It's an automated market making DEX, essentially. All right, and then Gen 4 stablecoin, right? Now this gets a little bit more interesting because up until Gen 1 and Gen 3, right, we have basically 100% collateralization or more, right? In the case of DAI requires, if you lock up like Ethereum, it requires 150% worth of collateral versus the face value, right? So, and then obviously USDC, you put in $1, you get 1 USDC. So the collateral is 1-to-1, either 1-to-1 or more. Now, in the future, right, I think the trend in the industry definitely is going to go toward, the path of decollateralizing the assets that are locked up inside a stablecoin. And why do we want to do this? As more and more confident and trust built in the DeFi ecosystem and stablecoin as a whole in general, decollateralizing these type of products can lead to additional growth, additional opportunities and innovations, and way for us to build even better financial products, similar to how banks does fractional reserve banking, and that allows them to lend out money, which drives business lending activity and borrowing activity, which drives economic growth, blah 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 blah. So that's kind of like the direction that we foresee that's going to happen to stable coins in the future.
Hey, Kory, there's a menu over the slide.
Oh, sorry. Yeah. Good catch. So yeah, in the future, right? Ultimately, at some point in the future, oh, actually, I should show you an example of a Gen 4 because I do want to give a shout out to my buddy Sam Kazemian at frax.finance. He is creating Frax, the world first fractional algorithmic stablecoin. Sounds super fancy, way over my head. I'm still making Gen 1 stablecoin right now, and but I love learning about these new stuff every day. So let's see. This website doesn't have anything except for white paper. Let's see how thick this white paper is. Yeah, that's pretty thick. I'm not gonna go over this right now. But Frax is a fractional, stable coin. And what that means is, the underlying collateral for it over time is not going to be 100%. It's going to be less and less over time. But the ultimate goal of this stablecoin system is to still maintain the peg, the value of, the stablecoin. In this case, probably 1-to-1 with the US dollar. And so, as you can see, ultimately, where is this going to take us? One day, we're likely going to have stable coins that are not backed by anything, that are close to 0 or even 0% collateral, and they will somehow.
I think they call that the US dollar.
Well, you see, so I mean, in real life, right, we see something like that already happen. It is the US dollar. It used to be pegged to, redeemable for gold. That you can take a US dollar to the treasury and just actually get gold, physical gold for it. You can't do that anymore. Nixon killed that gold convertibility back in 1971. Obviously, yes, the US dollar has lost value since then, but people are still using it as the world reserve currency, and for the most part, it is the very stable currency. I'm from Vietnam, right? And in Vietnam, we people over there, if they got a little bit of money, they either buy real estate or they trying to put it into US dollar or gold somehow. They wouldn't hold it in their local fiat. 100%. So US dollar definitely, even though it's unbacked and it's, not collateralized, it's working, and it's the #1 reserve currency in the world. So, in the stablecoin space, who are we to say that won't work eventually one day, right? There's just this chasm of doubt and experimentation that we got to cross. There's no good way for us to cross that right now, because nobody's figured out like a for sure method to do this yet. We have projects out there like Ampleforth, which I'll pull up here real quick on my screen.
Yeah, Ampleforth was a guest on a previous show. We had a great turnout. A lot of folks are interested in it.
Was Brandon your guest on the show?
Yeah, Brandon, Evan, and one of their board members who's at the Hoover Institute.
Awesome. Yeah. Hey, Brandon, if you're watching this, congratulations on all the success, man. Hope to see you in San Francisco again one day. But let me talk a little bit about Brandon's project that I'm not really a super expert in. So do apologize ahead if I do mess up anything. So Ampleforth is, they don't want to call themselves a stablecoin, I think. They're, but it is a stablecoin-like token that whose value is not, really derived from, any physical collateral. The smart contract Ampleforth adjusts the supply, the token supplies in order to, synthetically engineer the price of Ampleforth to be more or less around $1. And there's incentives for market makers and market participants to kind of like participate in this system because they stand to make a profit from arbitrage if they engage in this. And, that pursuit of profit will in turn help bring stability to the system. So it's a really cool project.
Yeah, it is a super cool project. And if folks are interested, they can go to Just Stable on YouTube, where we have all the old shows, or look up on Medium where I did a blog post, wrote it up. Because this is, I think, a great framework for talking about stable coins. But before we do that, can you want to tell us a little bit about Stably and how you're using stable coins in your business?
Yeah, sure. I talk about stablecoins so much I forgot to shield about myself. So let me pop over here. I'll pull up a little deck here about Stably. So what is Stably? Stably is a fintech startup from Seattle. We're founded in 2018, as I've said earlier. Where our mission is to make financial transactions faster, cheaper, more transparent, and borderless. Very straightforward. And the way that we do that is through tokenizing real life assets. We tokenize literally, anything that we can get our hands on. We work with a very high profile enterprise client and customer, ranging from crypto exchanges to precious metal dealers to other stablecoin issuers, other fintech company, etc., to help them build their own brand of stablecoins or a tokenized asset. And our vision really is to create a neo banking platform powered by stablecoins, again, which is faster, cheaper, secure, transparent, and borderless, right? For those who don't know what a neobank is a type of direct bank that's 100% digital and reaches customer on mobile apps and personal computer platform only, no branches, brick and mortars. So yeah, so that's generally a vision of what Stably does. Here is a highlight of one of our products with one of our customer, Cadillac. Is cryptocurrency exchange that is regulated from Canada. We worked with them earlier this year to create CADX, which is a Canadian dollar-backed stablecoin that leverages our technology in the back end to power the system. And it is also issued by a regulated trustee called Prime Trust in Nevada, USA. So this thing is compliant and it's good to operate under U.S. laws. So this is one of the example what we do. Another example project from one of our clients is VNDC. This one is from the emerging markets. This is a stablecoin for Vietnam. We partner with this client to issue a stablecoin that is pegged to the Vietnamese currency, the VND, and it is powered again by our technology in the back end. And this stablecoin is actually quite interesting because Vietnam is an emerging market. It has a lot of opportunities as well as certain barriers to growth, such as capital control. This particular project here is designed to tackle that very issue. So the reserve of VNDC is actually not held within Vietnam, it's held offshore with a regulated trustee in Hong Kong. So as soon as you purchase a piece of this token from within Vietnam, you essentially just purchase a piece of offshore money. So that way you're essentially you technically just took your money out of Vietnam without even breaking the law, because you're not sending fiat out. You're not decreasing the national money supply. And the national money supply doesn't include Bitcoin or stablecoin right now. So you're not breaking the law. And in Vietnam.
What kind of company is VNDC?
VNDC is a fintech company from Vietnam. They have a, here I'll click on the About Us here. So they have, so this is their team, Vietnamese people. And they have a platform that has a wallet, an exchange, crypto lending, P2P trading, etc. So kind of like very similar to Binance, but localized for Vietnam and catered to the Vietnamese market. So yeah, that's the VNDC project. And we actually just launched this today, so there should be some PR coming out for it very soon. And as you can see, we partner with First Digital Trust on this project to be the regulated trustee. And we're going to, we plan to employ Cohen & Co., which is one of the top auditing company for stablecoins. The reason we're also placing the the reserve for the stablecoin offshore in Hong Kong is because Vietnam follows a civil law framework, not common law. So trust laws is not supported in Vietnam. You don't have trust law in Vietnam. You can't really, well, you could build a stablecoin in other methods in Vietnam, but that's not how the majority of most stablecoins in the world structure, like USDC, Paxos, blah, blah, blah. They're all structured as a trust-based model. So we thought that for us to kind of like reach the same amount as the international standard for stablecoin, we have to get a trustee and get this stablecoin set up under a trust framework. And that's what we did.
Kory, I realize this just launched today, but with your other coins like the Canadian coin or your own, SUSD,
yep.
Do you think in terms of the market cap, how much is outstanding in circulation for those? Is that an important metric?
Yeah, absolutely. For USDS, the first USD-backed stablecoin that we issue, we kind of create that one more as a model product because we knew we were late to the game from the start. When USDC and Paxos and Gemini and True USD and even Tether, right? All these guys all came out before us, and they're all they're a lot larger and lot more well funded than we are. So we want to battle them on exchanges and get into the liquidity game. It's just suicide. I don't have enough venture capital funding to do that kind of thing. So, but we have our own unique advantages, and we have our own unique networks of clients and leads. So we started looking into tokenizing other stuff like precious metal, emerging market currency, foreign currencies, and yeah, these are new projects, and we expect them to generate significant market cap over time, especially these emerging markets projects. For example, I'll click on the white paper for VNDC here to pull up their growth statistics. I just really want to highlight this. This is very interesting. They recently had a growth report that shows that in a year and a half or 2 years, almost 2 years of operation, their platform has gathered over 700,000 users in Vietnam. For your context, there's about 90 million people in Vietnam, so that's 98 million people, so that's almost 1% of the population there. They have total exchange volume $127 million and $16 million plus in P2P transaction. So this is a project that is gaining really great adoption in an emerging market, and they're doing a really great job at educating their user base about crypto, blockchain, and also stable coins, etc. And we expect that as these user base and these emerging markets gets more sophisticated over time, evolve, the amount of market cap and wealth that we can generate from these markets could be very, very significant as well. If you look at stable coins right now, what is it dominated by? US dollar, right? Mostly USD stablecoin. USD stablecoin, right? If we go back to my model over here, what's cool about USD? Very safe, very stable. Maybe even FDIC insure, right? But in return, you don't have any yield. You don't have a lot of risk. Don't have a lot of yield either, right? That's fine. That's fine as a stable coin that is supposed to be low risk and no yield. But what if there are people out there that want stable coin that are higher risk and higher yield, right? There's always a place for those type of products out there. And so, where do you find those products? Go look at emerging market, right? You go to Vietnam, I was just there a couple months ago. If you go to Vietnam, you walk into the bank, the banks over there is paying 6, 7, 8% a year APY. But again, banks in Vietnam are not insured. If they blow up, then you're kind of screwed. The government, I don't know how much they can help you out there. So there's a higher level of risk, but that's what people over there have to deal with. And to them, that's okay. They want to see their 6 or 7 or 8% APY. If they see a U.S. bank account that's paying 0.01%, that's a joke to them. So there's always a certain market for that. And not just Vietnam. Look at the Philippines, Indonesia, Africa, India, all these emerging markets. I mean, just even Europe in itself, Eastern Europe, Western Europe, many, many different countries, right? The Middle East, South America, Latin America. There's just many very unique sources of liquidity and yield that are still locked up in the real world right now that we have not tapped into yet. That's why Stably at the moment, we're not too focused on the later generations yet. We think at the very cornerstone level, at Gen 1 level, we still haven't fully realized the full potential there yet, right? All we see is US dollar peg or back stablecoin right now. I want to start seeing, Chinese yuan. I want to see Vietnamese dong. I want to see the ruble. I want to see, whatever currency that has the highest yield right there, even higher risk out there. There's always a market for those things. Even other asset classes, not just fiat currency, gold, precious metal, commodities, real estate, etc. Anything in real life that has that can transfer liquidity in digital form and bring their yield as well as risk into the DeFi world, we want to tokenize it. And that's basically our philosophy on how we approach the stablecoin evolution.
You know, one of the things is you talk about the Gen 1, Gen 2, Gen 3. You have decentralized smart stable coins. Do you think that we'll have centralized smart stable coins as well?
Yeah, absolutely. I wouldn't call those, I mean, I guess they are smart, but not in the same kind of smart as the smart contracts, like human smart, right? But then you wouldn't call them smart anymore. They're just normal, normal managed stablecoin, I guess. But yeah, there are definitely those kind of flavors coming out. I would categorize those as just centralized stablecoins, Gen 1, because, you know, if it's basically a token that is backed by a reserve that is investing in something, and there's like an investment manager that's managing those investments and make sure that nothing bad happens, right? That's essentially what, you know, what a centralized smart stablecoin would be. There's actually a very good example of that already. Let me back over to Google and show you staker.io or staker.com. Staker.com. Staker.com is a platform that allows you to issue a stablecoin called USDS with the circle here. And what is it? They actually have FYI down here. What is it? It's a type of cryptocurrency pegged to the USD, also the pricing unit for commodities on their website. What does that mean? That means, you know, they have various investment program that pays these kind of yield. You can see 3.5%, 6%, 14%, 17%. Obviously, they increase in risk as you know, the yields get higher, right? But these USDS stablecoin that Staker offered, they're essentially backed by these investment reserve and the investment strategy that governance, how the allocation, the tradings are done. That's based on the Staker management team, right? So this is an example of what you would call a centralized smart stablecoin. It would just be a centralized managed stablecoin. I think these guys are not based in the US. I don't even know if they are
in the US.
Yeah, this can't be based in the US. It looks like they're really a Taiwanese project because in the US, this definitely would be a security token. Have to be registered and everything.
Yeah, exactly.
Yep.
Okay, we got a first question from the audience from Luca. Luca, you should be able to ask the question.
Hi, thanks very much. Very interesting presentation. As usually, anytime you make presentation, Lou, they're always very interesting. For the first time, I managed to see stable coins other than just a parking site, and I found a usage of the stable coins. And my question was, what condition do you need to replicate that experiment that you're doing with the Vietnamese investment? I mean, in which countries? You mentioned this would be applicable to many other countries, especially in emerging countries. I understand that where you have local interest rates which are high, it makes it interesting. But in addition to that, you need a place. You had Hong Kong close somehow to Vietnam, which was maybe favorable for that relocation of the company. But what would you need if we're thinking of South America and one of the countries there? What would you be able to make the connection, taking advantage of high interest rates in a country in South America, and maybe putting the company in US, or would you have problems with the regulation there of somehow?
It really depends on each of the market that we go into and what kind of partners we have there locally. In the example of the Vietnamese market, right, we have a partner, they're called VNDC. They're the expert in local regulations and they have connection with the government over there and they know what they're doing, right? I'm Vietnamese, but I grew up in Seattle. I'm as American as like, apple pie. So, so I definitely do not want to deal with going back over there and having to work with the comrades over there. So VNDC take care of that for me. The way that the crypto regulation in Vietnam is right now is it is illegal to use cryptocurrency as a form of payment for goods and services. So you can't use it to pay for stuff, but it's completely okay for you to hold it, buy it, sell it, send it to people, send it outside the country, send it inside the country, borrow it, lend it, whatever, right? That's not regulated. That's kind of like a gray area. You don't even need a license to start a cryptocurrency exchange over there, because that's not regulated yet. It's still a gray area. There's a lot of crypto exchanges that operate over there without license, and the government just kind of tolerate them and doesn't do anything. So based on that regulatory, environment, we know that, okay, so yeah, we can issue a stable coin, get into circulation, and, kind of use it, let the Vietnamese people use it. They can't use it for payment purposes. So, the VNDC people got innovative, and they strike some deals with merchants over there that will accept VNDC as a voucher, as a gift voucher. So it's not a payment, it's a gift that, it's a voucher that you redeem for merchandise. All right, so that makes it compliant over there. And then, Vietnam in itself is a country that is capital control or foreign exchange control. All right, you can't send out, I think, more than $50,000 per person a year. It's not a lot of money at all. If you sold a house over there, you're like, $500,000, $300,000 easy, right? I think my parents' old house in downtown Ho Chi Minh City, that thing's probably going for like $1 million right now. Man, we sold that thing way too early. But how do you get that much money outside of Vietnam, right? You have to go to the bank. You have to fill out a form. You have to tell them why are you sending this out. They're going to ask you, do you have paperwork approving you to send this out? What's the purpose? Blah, blah, blah. And then most of the time, they won't let you, like the law doesn't let people send money out because they want to keep money within Vietnam to help strengthen the economy. And so people in Vietnam, you have to realize, as soon as they purchase a VNDC token, the stable coin that we have, whose reserve is already placed offshore, they're buying a piece of offshore money. I mean, this is the same with any other stable coin out there, like, TUSD or USDC. As soon as they buy them, they buy a piece of offshore money that they can just take the money out legally without breaking the law. And, it just so happened that, VNDC, the project we're working on, is denominated in something they're familiar with, and is offered by actual Vietnamese people. I think Tether is the largest stablecoin that's being used in Vietnam right now. But, Tether doesn't have present people, communities, whatever in Vietnam. Vietnamese people just start using it. What our hope is, with now with an actual legitimate Vietnamese back company that has people presence over there that has their own uniqueness and stablecoin product, they can slowly take market share away from Tether and have their own place in their own community, in their own ecosystem. It's Vietnam, right? You should have a Vietnamese stablecoin for Vietnam. Why is USDT the stablecoin for Vietnam? So
okay, you good, Luca?
Very interesting. Thank you very much. Yes, clear.
Okay, terrific. Thanks for that. And let's see, we'll take our next question from Lori. Lori?
Hi.
hi, Lori.
How are you, Kory?
I'm doing great.
It was a wonderful presentation. My question is, has Tether won the stablecoin war given its current dominant market share? Or do you think USDC, DAI, or others can topple Tether?
Yeah, I wouldn't say they won the war or even the battle. The war is long from, I don't think the war is ever going to be over. It's going to be a permanent war. But battle-wise, yes, in the US dollar race or battle right now, Tether is in the lead. But USDC is catching up very quickly right behind them. And there's a lot of reasons why USDC is, catching up really fast, and why, if crypto became more mainstream, institution would prefer USDC over Tether. I mean, that's just, they're regulated. For example, a registered investment advisor, the Series 65 license in the US, I used to be this guy. If I want to allocate my client's money into a stable coin, no way I'm going to put into USDT, right? Like, me, that's too much risk, right? The DFI in Washington State would breathe down my neck if they found out I put my client's money into something that is like going under like a potential lawsuit with the NYAG right now. So,
Right.
So yeah, I don't think that they won the battle nor the war, because the war will have many battles, like the USD battle, the VND battle, the gold battle, commodities, precious metals. real estate, whatever, right? There's many different battles for tokenization. So I think there's still a long game. And, today I only really talk about tokenizing different asset classes yet. I haven't even talked about, the different dimensions within each asset class. For example, you tokenize the US dollar, right? You have USDC. Well, what do you think is going to happen if Amazon or Costco or Walmart tokenize the US dollar? Those stable coins going to have way more utilities and benefits to them versus USDC. And how's USDC is going to compete with that? I mean, USDC has their own kind of like market segment and whatever, but definitely Walmart and Costco and Amazon have their own target market. So again, many battles to be fought, to be won. It's not over yet. And I actually look forward to 2021 as the year that many regular businesses, major businesses, large names, gonna come out with their own brand of digital money in the form of a stable coin. And one day, maybe during Thanksgiving, you'll see a bunch of stable coin from different brands out there, and they all have different kind of discount. Like the Amazon coin will have some discount. The Best Buy coin will have some discount. The Costco coin will have a shit ton of discount because I'll be over there 100% without a heartbeat. I love Costco. So, imagine all the arbitrage trading opportunities that's going to happen. Costco shoppers going to want to dump all their Walmart coins to get the Costco coin. Walmart shoppers going to dump all their whatever coins. Man.
I look forward to those coins.
Now that you think
especially
about
Amazon.
it, that might even accelerate, the decline of some of these retailers out there. Whoever doesn't have a stable coin under their own brand, they're gonna fall behind. So,
are you in discussion with any retailers?
I cannot comment at all.
Ooh.
Okay.
Okay, thank you.
But we work with a wide variety of clients.
Okay. Thanks, Lori.
Thank you.
We got our next question is from an audience member that wants to remain anonymous. And they're saying, that, for the Gen 3 stable token, stable coin, as you were talking about it, where they're paying interest. Is it always paid as new tokens issued? And that rate of creation is less than the local rates. Not exactly sure what he means by that.
Yeah, so when he is,
and can these become Ponzi schemes?
Oh man, you really want to get into philosophical about Ponzi scheme, man? When you look at the US dollar, okay, I'm not going to go down that rabbit hole, but what he is saying is, okay, let's say the smart stablecoin, it is, through its internal mechanism, through it allocating, its reserve into Wire or Curve or to various different DeFi protocols, it generates some sort of yield, some sort of return, right? That return then could be locked up inside that protocol, and it could be redeemed at any moment. But how do you let people redeem it, right? You can either not create any additional tokens and let the value of those yield be locked up in the smart stablecoin itself, or you can mint more smart stablecoin and distribute it out. And what he is talking about is, if you mint more, if the rate of minting is more than the rate of internal yield that you're actually generating, could it then be a Ponzi scheme? Ponzi is a harsh word, right? Fractional is a lot more professional, I guess. If the rate of the minting exceeds the rate of internal yield, then that means there's more token being minted than than should be generated internally. So yeah, you are essentially kind of like decollateralizing your coin. So that's not 100% back anymore. It could be like 95-9%, depending on how fast you're minting, right? So yes, that could happen. It really just depends on what the project is doing. If there might be a reason why they're doing that. There might be, there might not be a reason there that they're doing that, and they're just experimenting with it. Who knows, right? Again, chasm of doubt and experimentation. With decollateralizing these stablecoin, we'll just have to cross that bridge, or no bridge, right? We just have to build that bridge when we get there.
Cool. Do you have a view on CBDCs?
Yes, I do. I love CBDC. I think they should create CBDCs because that makes my life easier. Right now, I have to tokenize fiat currencies, right? And we have to basically use fiat accounts to do that. If CBDC came out, it'd be a hell of a lot easier for me to tokenize CBDC and bring them onto Ethereum, Polkadot, Stellar, whatever that I'm working with, versus fiat right now. And why would I want to do this? If you're gonna have a government currency or a stablecoin or CBDC, there's always gonna be a market for for something that is one step removed from that, right? So you have US dollar. Well, there are US dollar ETF, there are US, there's money market securities ETF, blah, blah, blah. So CBDC come out, we can totally tokenize it. Bring it on, put it onto Ethereum, put it onto whatever, right? Why would we want to do this? Well, that US dollar CBDC might not be open. It might not be borderless. It might have to be 100% KYC per holder. It might only be reserved for US citizens, right? Tax ID holders. So we don't know what the CBDC is going to be, but I do know that once it comes out, we can totally tokenize it and put it onto the blockchain, the real Ethereum, or public blockchain, not a closed system, which is what a lot of these CBDC projects are discussing, creating closed loop system that are not open, which is great because then I'll tokenize them and I'll open them, right? There are CBDCs out there that are more open-minded, that do want to build themselves on public blockchain, so that they'll be open by nature, open loop by nature. So those are cool. I really look forward to those. I think those could be integrated and directly in a lot of application. But again, I still think that there's gonna be a need for tokenizing those things because I could tokenize the CBDC and deposit it into like a DeFi protocol or like some sort of yield generating vehicle. And then, then I can have a smart stablecoin that is collateralized by that CBDC, right? There's so many opportunities. Walmart could tokenize that CBDC to create Wally coin,
You've talked about, a few things that you thought were interesting, like Frax and Ampleforth. Are there any other projects, anybody doing anything, whether that's actually issuing a stable coin or leveraging a stable coin? Like for me, one of the projects I talk about when I'm asking who's doing it, super interesting things. One of the projects I like talking about is Centrifuge, if you're familiar with them.
Yep.
Yeah, I assume you would be. So I don't know if there are other projects you want to kind of give a shout out to and say, hey, I think what they're doing is super interesting that the folks watching the show might not be familiar with.
There's so many projects out there that I actually can't recall any of them on my head. Let me think here. Some cool DeFi related stablecoin project. There's DeFi Dollar. DeFi Dollar is similar to I guess M Stable. Another one of these smart stable coins that is backed by a reserve of DeFi lending or DeFi liquidity mining, etc.
Yeah, completely agree with you. Actually, they were on the show a couple months ago, actually, before they launched. I thought it was super interesting. These a couple young guys out of India, able to attract U.S. venture capital. And a super interesting project, and it's been exciting to watch them launch and see the growth.
Yeah, absolutely. I think there's also OUSD, which did suffer, some issue recently, which is unfortunate because I really like that project. I do hope they recover from this. But OUSD is a stable coin that is backed by, again, as a smart stable coin backed by a pool of, a lending DeFi protocol, lending pools, liquidity mining pools, etc. Couple of days ago, what happened was they were exploited. Their smart contract were exploited in a flash loan attack, which then basically exploited a flaw in their rebasing mechanism that allowed the attacker to withdraw $7 million worth of collateral from their system, and their system at that point was like $11 or $12 million worth of collateral. So a lot of people
in
got
terms
wrecked.
of, yeah, we actually had them on an earlier show. Josh was great, super interesting project, and it's sad to see them get exploited like they did. The simple way I think of it, I think it's like the early days of flight, where that there are going to be plane crashes, right? I mean, that's just and so everybody knows that there are risks involved, and hopefully from each plane crash, right, we learn so that particular crash or that particular exploit doesn't happen again. But I think the idea of how they were seamlessly able to integrate the interest with the coin was super interesting. So we always finish the show with.
Oh, before we finish, I just want to talk a little bit more about OUSD. Just kind of like, I'm part of the industry. I just want to do my part to kind of help set precedent and kind of shape the thought leadership out there. Even though OUSD suffered that catastrophe recently, like you said earlier, in the early days of airplane, there's bound to be crashes. It's gonna happen, in the interest of innovation and growth, that will have to happen. But what I appreciate about OUSD is they have their founders and developer teams actually putting their own money. They have their own stake in this thing, so it's not like they build something and tell people to put money into it and then something happened and, oh, sorry that happened, but like, we're okay, nothing happened to us. So, we're scratch free. No, they got scratched too. They lost money in that attack. So I commend them for that. That's what, it's not, I guess, it's not the end, right? That justify the means in this case. It's the means that justify the end. They have good intention. They want to build something that's innovative, that's creative, and has, that creates new value. And they tried their best to make it safe. They even staked their own money into it to put their skin in the game, and it didn't work out. That's unfortunate. But guess what? When Boeing first created, I think it was the 777, the first fly-by-wire airliner, right? You know what happened on the first test? They put all the top software engineers at Boeing onto that plane because that plane was so valuable, they cannot afford it to crash. So everybody, all the top engineers at Boeing was on that plane. And during mid-flight, that plane shit started happening. It was about to crash. And then mid-flight, all those engineers really quickly found a fix, updated the software. What was it? It was the fly-by-wire control system that controlled the rudder. They fixed it and it stabilized. So that's insane to think about. So, but they put skin in the game, and that's what matters. Planes is gonna crash. People will, unfortunately, people will die in the process, but it's the engineers that put their skin in the game to make things better. That's what matters.
Okay, cool. So we got 1 minute, so answer this quickly. What do you think we'll be talking about if we have you on a year from now? What do you think we're going to be talking about then that we're not yet talking about in the stablecoin ecosystem?
Fingers crossed. I'm hoping that this time next year, we're going to be talking about, so what do you think about this Thanksgiving holidays? Walmart coin, Amazon coin, Costco coin. What are you guys thinking? Which one are you buying? Which one are you using? I really want to get into that conversation next year. I really think we have a chance of making that happening as a whole industry in 2022. Now that, Bitcoin is about to reach 20 grand all-time high again, it's the best time for us to take this opportunity to hit up all the leads at Costco, at Amazon, at Walmart, at, wherever, and tell them you need to do this now. Facebook's doing it. Walmart's doing it. Wells Fargo is doing it. You will get left behind if you don't do this soon.
There you go. Yeah. Well, from your mouth, hopefully they'll hear what you got to say. Kory, you were awesome. Thanks a lot, and I look forward to having you on the show again.
Yeah, thank you so much,
everybody, for joining, and we'll see you next week. Actually, not next week. Next week is Thanksgiving, but we'll see you the week after that for Stablecoins Are Killing It, number 22, and our guest is going to be Algorand. They're doing a lot of interesting things on the Algorand blockchain with stablecoin. So I'm looking forward to that show. Hopefully we'll be able to make it. Thanks, Kory.
Thanks, Lou. Bye-bye.